This video will be the most important video that you've ever seen about Navy Federal. So let's get into it. Everybody talks about the Navy Federal glitch, right? But the truth is there is no glitch, all right? Nobody is magically getting approved for $25, $40, $50,000 because they found some secret loophole. No. What is actually happening is they understand how Navy Federal looks at risk better than average person. And that is the huge difference. See, most people think every bank uses the exact approval system, same score with the same requirements, with the same decision-making process. That is not how it works, because banks have their own internal models, their own relationship metrics, their own ways of evaluating the risk, and Navy Federal is no different. Now, before we talk about approvals, let's talk about what kills the approvals. Collections, recent late payments, a messy credit profile. You can watch all the Navy Federal videos you want, but if the profile is weak, none of the tricks matters, and the foundation has to be there first. That is step number one, having a clean profile. Then we remove the piece that most people miss, which is comparable credit. This is huge. I cannot even emphasize this enough. Think about it from the bank's perspective. I really hope you don't miss the audio, but let's keep it pushing. If the biggest credit card you've ever seen, you've ever managed is, let's say, a $500 limit card, right? Why would a bank suddenly trust you with a $25,000? There is no history. There is no any history that is supporting that decision. There is no any proof. But if you've already managed a $10,000 credit card or $15K credit card, now the conversation changes because you've already demonstrated that you can handle larger amount of credit responsibly. And that is what the banks want to see. They want to see patterns. They don't want to see potentials. They want to see patterns and systems. And this becomes even more important later when we start talking about business funding, because a lot of business lenders look at your personal profile first. They're looking for evidence. They're looking for comparable limits. They're looking for signs that you've already managed larger credit lines successfully. So when somebody builds a strong personal profile first, they're not just helping themselves today, they're setting themselves up for the future approvals as well. And that is why I tell people not to focus on the approval by itself. Just focus on becoming the person the bank want to approve. The approval is a byproduct. Then there's another thing people don't talk about enough, which is separation. Once you start moving into business credit, the goal is keeping personal and business activities separate. That is literally one of the reasons business credit becomes so powerful, because you're building business relationships, building business limits, and then keeping your personal profile in a stronger position for future opportunities. And the people who win at this, they don't chase short outcomes. They build a strong credit profiles. They build a strong banking relationships. They understand how lenders think. And that is why they keep getting approved while everyone else keeps looking for a glitch or a shortcut, because there was never a glitch to begin with. And look, I'm not a huge guru with millions of followers. And honestly, I think that probably might be a good thing, because when you book a call with me, you're actually talking to me. I'm gonna pull your credit profile, go through it line by line, and tell you what is helping you, what is hurting you, and show you exactly what needs to be done if your goal is funding, whether that is 20K, 50K, or even 6 figures in capital. So click the link below, book the free credit article, and let's see what is your profile capable of actually getting. Let's get to work.